Hello, and thanks for joining us today. I'm super excited that you're here because today we're talking about how to basically eliminate financial leakage in your business. And believe me, this is a huge problem. Look, as business owners, we need to run businesses that are profitable. And the reality is the more profitable our businesses are, the more we can reinvest to grow faster, and the more we can also put in our pockets. So it doesn't matter how many customers we have. It doesn't matter how big our top line revenue is. What matters more than anything is the actual profit of the business. And it's staggering how much leakage a normal business has, how much money you're losing that just a tweak here, a tweak there can help radically increase profits, make your business worth more, have you have more money to be able to invest in growth, and also put more money in your pocket as well. And to decode this with us today is Eunicia. Now, Eunicia Peret is a seasoned executive and business owner, accomplished financial consultant, mentor, and educator. She is the CEO and founder of the Empowered Financial Planner, setting hundreds of clients on their paths to financial independence and wealth optimization. Eunicia, welcome. Thanks for coming in today.
It's such a pleasure to be here with you today.
Yeah, I'm really excited that you are here because I've looked a lot into this, and it's interesting because when I found advice from really smart people like you and I've applied it, it works. Like it radically increases the profit of the business. But a lot of people here might not even know what we're really referencing. So let's start there. When we talk about leakage in a business, like what are we really referencing?
Leakage in a business, similarly to on more of a personal side, can really have a lot to do with, to your point from earlier, how exactly we conduct business. Because at the end of the day, it's not about how much we make; it's about how much we keep. That's you're spot on that. One of the things that we found especially with business owners, is that there's a lot of money that's being left on the table when it comes to tax optimization, for example, particularly because they perhaps work with teams of either a CPA or a bookkeeper or individuals that maybe in some cases they might have outgrown in terms of their area of expertise, in terms of how they truly optimize the tax code. Everything that they do is it has to be legal. But if we're dealing with individuals who are not suited from a tax perspective as our financial partners, it puts us in a potential pickle. The other big area that we see a lot of people leaking money is in how they go about investing, either back in themselves or back in the business. But especially when it comes to how individuals pay themselves, because they don't have a team. Again, we're going to the team of experts. They don't have a team of experts that can help them think through how much money should I take from the business and actually pay myself, so that you start decoupling the personal versus the business finances. Oftentimes individuals end up in a situation where they perhaps sell a business and they realize that everything that they worked so hard for ends up going with the business, and then they end up paying a ton of capital gains because they didn't do things correctly on the forefront. So there's a lot of planning and a lot of strategy that goes into it, so that we don't end up leaving money on the table on one side or the other, or possibly even other areas such as legal exposure, etc.
So when you talk about tax optimization, this is a new phrase I've started to hear more recently. And I was talking to a buddy of mine the other day, and he was like, man, I ran into this massive savings, went to my account. And I'm like, what did you, he's like, yeah, we could do that for you. I was like, why didn't you tell me about this? This doesn't seem to be a thing where accountants, bookkeepers, the financial people we think we need are giving us the right advice to be able to optimize taxes. They're just filing our taxes or just preparing statements for us. So what is tax optimization? And like, in that itself, what does that do to help us stop leakage?
Ty, that's such a powerful question. And I wish more people asked the same question, because when too many individuals don't really think about even just the notion of filing for taxes versus tax planning, right? They assume that just because they have a tax person or a CPA that does their taxes, they're automatically optimized. That couldn't be further from the truth. A brand new client to us just 2 weeks ago, I was having a conversation with them, and they said something along the lines of, last year they sold a business, and after the sale was consumed, they went to their CPA and said, okay, what can we do to optimize? And he said something along the lines of, and my CPA went to a specialized seminar so that he can better understand how we can optimize on our taxes. First and foremost, that is far too late, because some of those strategies should have come up before the sale of that business. They should have been implemented and strategized against the sale itself. But the other thing that people don't realize is that just because they're paying for the tax to be filed, those taxes to be filed on a yearly basis, does not automatically mean that they're going to have a 1 or 2 year, twice a year conversation with their CPA to do tax planning. And too often when people hear tax planning, they immediately think, well, it's going to cost me more. Here's what I'll tell you. There have been individuals that sold businesses upwards of millions of dollars, tens of millions of dollars, and end up paying huge capital gains on those businesses, on the sales of those businesses. Why? Because that tax planning wasn't there ahead of time. We're dealing with someone that is in the process of coming onwards as a client. And I asked him, I said, why did you end up paying this massive tax when you sold the business back 7 years ago? And he said, I know. Can we do anything to go back in retrospect? Well, 7 years is a long time. Again, the question then becomes, where were these people's financial teams when they needed to implement those strategies, not on the aftermath, and not because you as a client of somebody that deals with your taxes or your bookkeeping is you have to go kind of nudge them and say, hey, can I be doing more? They should be the one coming to you to say, hey, here's something that you're missing out on. Here's part of the tax code that could be applicable to you based on XYZ criteria. But unfortunately, that doesn't happen as often as it should. As a matter of fact, it happens far less than it should in most cases.
And this is a really big thing, and I can't stress it enough. To give you watching this an example, we just discovered R&D credits, right? So we're a software company, we're building software, and we literally have nearly $300,000 being refunded by the IRS. And the check just hit our bank, $80,000. Can you imagine the IRS just dropping these massive checks? But the reality is our financial people failed us. They didn't even tell us about that. We didn't even realize that was there. So what you're talking about could really relate to hundreds of thousands or millions of dollars in loss to a business, which brings back another point. Who should we have in our corner? Because like as an entrepreneur, I've learned, you first start with a bookkeeper, right? They got to kind of keep your books. And then you graduate, you got to have an accountant file your taxes. And eventually you need an accountant to do more stuff. And then maybe you need a controller and a CFO. So where along the line, like who is on our team that we can rely on to help us figure out where this leakage may be, or even, for example, dive into things like tax optimization?
Well, first of all, let me address something really quickly. What you said about R&D. Prime example, we do have several clients in the situation where previously, prior to us kind of really being kind of their financial partner, they didn't know that those were even an option. Why? Because their CPAs never talked to them about it. Prime example, I love speaking through examples. One particular individual was working with a CPA who had him in all sorts of quote unquote tax optimization contracts, but every single one of those contracts is actively being audited by the IRS. And the CPA told the client, yeah, don't worry about it. They're not going to break through to your personal side. Well, how can the CPA assure that when the CPA is getting paid on those contracts being implemented? And so when we started working in, as an example, with one of those individuals, the question became, how do we get around it? And when we sat down with our team of experts that specifically deal with more of the, what I call them strategic tax guidance, the R&D credit came up. And just to give you an example of now dovetailing into your question about who should be on your team, when the tax experts started asking the client about, hey, tell us a little bit more about how your business, what in your business is considered or could be considered R&D based on these parameters, the client came back and said, well, I don't know. Why? Because he's in the business every single day. He does what he does every single day. It was a construction company. In his mind, none of the stuff that he was doing was truly R&D. But here's the deal. He does some very out of the box thinking when it comes to his industry and his field of work. So because he had a comprehensive team of financial advisors, truly financial partners, we were able to sit down and instead of just giving him a list of here are things that could be considered R&D and hope that he'll be able to bridge the gap in his mind because he's so intimately familiar with his business, we were able to ask questions. Well, what happens when you go do this? What happens when an issue arises and the walls aren't straight? How do you work around that so that you come up with a product and a solution for the client that's truly revolutionary? And when we started working through that, the client was able to say, okay, if we're looking at the list of activities that we do on any one of our jobs, here are the people and here are the activities that are truly R&D. And the R&D tax optimization team was able to, in his case, it was somewhere around $250,000 R&D tax credit. That's huge. And he never knew that those things existed. So who should be on your financial team? First and foremost, what people don't understand is that when they use a CPA, when they use a bookkeeper, sometimes the two of them will be in the same house, but then you're thinking about a financial advisor, you're thinking, or a wealth strategist, you're thinking about your banker, you're thinking about your attorney. None of those people are incentivized to talk to each other. And when I personally realized that there was no incentive for these people to talk to each other, that's another point of major leakage for individuals, because nobody is talking. Why aren't they talking? They're not getting paid to be talking amongst themselves. They're just being paid by you because of the services they're providing to you directly. So what does an optimal financial team truly look like? The team needs to be talking to each other. And if they're not talking to each other and they don't understand the strategies, for example, from a tax perspective, the financial advisor needs to be intimately familiar with what's happening on that side, and vice versa, the CPA with what's happening on the financial side and how the money is invested. As an example, because then you can get more of those synergies and ultimately that tax optimization, which then leads to you keeping more, or an individual keeping more versus less of the money that they work so hard for.
Yeah, I love that. And you brought up, good example. I brought up good, a good example, but I got to tell you, if you're watching this, listening to this, I mean, I've got a buddy of mine and I spent a lot of time with him in Utah. This is all he does is tax optimization. He has hundreds and hundreds of stories. Every time we're together, it's story after story after story after story. And it's astonishing, from startup business all the way to multi-million-dollar businesses, how much money gets returned or done right saves you before you even pay it. That you could say this is a great area to be able to prevent leakage. There are some other things that I don't even know if these are real terms or not, but in looking into what you do, these are some things I saw. Economic leakage. What is that? Is that even a thing? Like, can you speak more to that, or am I just making this up?
Well, I think economic leakage is really more along the lines of when you're thinking about the money, for example, that you're bringing in as a business owner, or even for high paid. We work with a lot of high income earners, high paid W-2s. W-2s and 1099s. A lot of those individuals, when you're thinking about the economics of their household, right? As more money comes in, more money gets spent. And at the end of the day, we see so many individuals that will come to us and say, well, I'm not wealthy by most standards, but they're making $500,000. Why is it that those people don't feel wealthy? Shouldn't they feel wealthy compared to somebody that maybe makes $20,000, $30,000, $40,000? They should. But they don't understand what is happening with the money coming in and the money going out, and where specifically is some of that leakage, where some of the economic pitfalls are within their personal finances, and sometimes within the business finances as well. I'll give you another example there. One of our clients, when we started working with them, one of the things that we assess is liabilities as well, right? How are the liabilities either helping or hindering us? Because having debt there's either good debt or bad debt. And a lot of people feel shown by both. When we work with this individual and his wife, one of the things that came up was that they had so much personal debt. Why? Because of specifically, they have some entanglements and some on a personal side in terms of their overall status, et cetera, et cetera. And so what they were doing is instead of going through the process of asking the question of, hey, should we refinance our house? They never refinanced from what used to be almost a 6% mortgage interest rate from years and years ago. We were all the way into the threes. And that fear of, will I even qualify? Will I even be able to do this? Sent them all the way to starting to spend on credit cards. So when we looked at what could have been done, the overall cash flow and the increase in just economic positioning for their family could have been huge if they would have just done a couple of different tweaks. But oftentimes, yet again, we're thinking in silos, and people are not bridging the gap between the different areas of their spend and their economic platform when it comes to where is money going and how could we keep and bring more in.
Yeah, and along that same line on personal income, what are the kind of leakages there? Because, for example, I see that a lot of entrepreneurs want to get paid 1099, right, in the beginning. They don't want to pay taxes on that money. Then as the business grows successfully, you kind of have to. Like, the state's going to start looking for, the CEO, the owner, to get paid, and they want their money, et cetera. But then I see a lot of people convert a lot of their pay as W-2, for example, whereas maybe they have another business that owns share in their main company, so they could get bonuses versus W-2 pay. I don't know if that's an example or not, but that's just something I think about when I think about potential income leakage, because they're paying significantly more taxes than they should just because of how they're getting paid in their business. Like, what do you think? What do you see related to that?
Absolutely. It's how they're getting paid. And this is where we engage our tax experts very often in conversations, running numbers for clients to figure out, is it better for them to continue to pay themselves 1099, especially if it's out of their own business, or should they look at filing as an S corp and then figuring out what the extra bonuses and things that are coming, money that are coming from the company at the end of the year look like. And then you start having a better projection for how income comes in and how ultimately how much more you can continue to pay yourself per year. The other thing when it comes to how people get paid, and it appears, this particular situation appears a lot more when people are trying to get loans, right? I know you talk a lot about uncollateralized loans and things like that. A lot of people don't understand that there are options when it comes to even getting loans. And so because of that, they're putting themselves in this vicious cycle of, well, I need to pay myself this much so that I can get that kind of a loan. And they forget the notion of, okay, how do I optimize my taxes, but at the same time, not put myself in a pickle when it comes to potentially needing a line of credit. And so there's not one clear answer outside of the fact that, again, it should be a conversation that is had with the tax prep individual, with the CPA team, to say, okay, how do we file this year? How do we need to get ourselves paid in order to make sure that we're optimized? And that conversation then being had with the attorney, with the business attorney, the financial person as well, to make sure that, once again, things are optimized through and through, or across all of these points of touching points.
Very much so. And there's just so much to that, to make sure that the IRS and the state and everybody's happy getting their taxes, but you're not paying significantly larger tax burden than you should. And I see a lot of people that they are. What about revenue? Would you see leakage when it comes to like even top end revenue with the business?
Absolutely. Absolutely. I see it all the time. As a matter of fact, it was funny. You had one of your prior guests on one of the podcasts was talking specifically about how do we invest back in the business, especially when as business owners, we have our blind spots. Everybody does. And way too often individuals will say, no, I don't need to hire somebody else to come and look at my mess. I'm good with my mess. I know my business. I got my business. But oftentimes, I'll give you an example. Several individuals that perhaps might be in real estate, they love real estate, they love what they do. But when it comes to maximizing their bottom line or their top top revenue line, they'll say, well, we don't want to increase rent, we don't want to do this, that, and the other because, and they have these huge becauses, when in reality, the market dictates and says something completely different. But way too often, similarly to how people they don't really want to, or they don't feel the need to pay for expertise when it comes to bringing together their financial team. Similarly, people don't see the need to hire somebody like an external consultant that can give them some ideas based on what's happening in the market and how specifically they could go about implementing those, thus therefore increasing their top line. And so it's a huge point. Unfortunately, it requires that the individual not only sees that there's a problem, but that they're open and willing and able to invest in themselves and invest in their business in order to see those increases time over time and year over year.
Yeah. And speaking to some similar point, I mean, I see so many people, business owners, that are afraid to raise prices when, like you said, the market dictates you should. Like, you're underpriced for where you are, especially for the service or product that they're offering. And then when I see a lot of people take action on that, they radically increase their profitability because they're charging more, as they should be, for the service or product. And yet they're not really losing clients. As a matter of fact, in a lot of cases, I've seen people actually increase clients because the increase in price increases the perceived value of the product and service they're selling. It's just astonishing to me. I don't understand why more people don't test price increases, because it's just an easy way, it seems like, to improve top end revenue and prevent some of that leakage.
100%. The other thing, Ty, that a lot of people I feel don't really do is they don't go through a list of really rationalizing their list of clients and customers that they serve. Meaning, do you have those clients that completely drain your business because of their high demands and they're so needy for and hungry for that ultra specialized attention when perhaps they're probably one of your lowest performing clients, or they are the lowest in terms of the profit that they bring in? It's okay to look at where you're at and ask the question of, am I serving the audience that I want to serve? Because otherwise, as business owners, they're doing a disservice to the people that they service, and the clients don't understand that, hey, I need to be a little more sensitive to how I'm handling this relationship, because it's not just a one-way street. It truly is a two-way street. And unfortunately, it's more of a softer, more tactful situation and topic that needs to be looked at by, I feel, just about every single business owner.
I completely agree with that. And that's like Peretti's principle of 80-20. And, when we looked into this, what we found is what a lot of business owners find: 80% of our revenue comes from 20% of our clients. But what's interesting is that 80% of our problems come from 20% of our clients. And those 20% are not the 20% that are giving us the most money. And this is exactly to your point. It's very real that the majority of your problems are caused oftentimes by the lowest paying people in the actual client pool. And then your best paying clients are the ones that you have the least amount of problems with. It's staggering if you ever really drill down and look at what you are. And then you start quickly realizing you just got to cut people loose. Like if they're the biggest problems and the biggest drain, you cut them loose, it frees up the resources to bring more of the good. And you're right. So few people even notice this, even look into this.
At 100%. It was actually, for us, it was one of my clients that kindly brought it to my attention. He said, "You're doing exactly what I've done with my business." I said, "What specifically is that?" He said, "Years back, I realized exactly what you said, the 80-20%, the 80-20 rule when it comes to clients' profitability, etc." And he said, "You're being very selective in who you work with, not from a profit standpoint, but because of the value that you know that you can deliver, of the excitement that you get to work with them." And I thought, oh my gosh, I never actually thought about that. But it was something that personally I started focusing on because of the joy that I was getting in serving the clients that I saw were not only appreciative, but were getting so much of the value, and they were working back and reciprocating in the efforts that they put forth towards their own problems. So yeah, that's a big one for individuals to think about. And again, sometimes they may or may not be able to see it on their own. It's okay to ask for help. It's okay to have somebody on your side that you can bounce ideas off of, because that can mean multifold in terms of profitability back to you.
Yeah. And I like that. And I like your previous point too, relating to financing and those kind of things, because, just yesterday we talked about this on the live stream where, with us, like we paid, now we have a credit line with Facebook, but we would use American Express to pay for all of our Facebook ads, 7 figures a year. And then we would pay it off before interest accrued. But the points that we got on that paid for basically all of our travel. I mean, it was the equivalent of 5 figures of savings plus a year that we're able to apply to travel and not pay any interest on it, just of how you're actually leveraging money. So again, I didn't really touch upon that enough, but I think that's brilliant, because I think there's a lot of leakage there of just how people are not properly using OPM or other people's money in a way where they could be, and be able to get significantly greater return than what they would pay to be able to actually borrow that money and be able to leverage it to be able to scale the business. Do you see a lot of that from the clients that you work with?
I do. As a matter of fact, it was just not long ago that we had a client come through and they asked for payment plans. And I said, yes, we do have payment plans. And then the other question was, well, what if I pay in full and pay with a credit card? I said, you can do that, or you can get this amount discounted. It turned out that the amount that the discount would have been double that of the point conversion that they would have received through their credit card company. And when you're thinking about big sums of money, it adds up. So people really need to just take a step back and not be blindsided by one thing or another, but rather be able to say, okay, where is the most economic value? Where am I getting the most economic value from and the biggest bang for my buck? And then go down that route. And what ends up happening is you're not just averaging, but you're averaging everything upwards, because now you've got different types of savings and different kinds of optimizations happening for you across the board. But I love the example of no interest and getting all those points. It's amazing what can happen when you do know how to use those credits.
Well, what about profit leakage? We talked about top end revenue. What about bottom line revenue? What are some things that are some easy wins that you see where people have this problem of having leakage on the bottom and the profit side?
I think a big part is just looking at the spending for the company, right? One of the things that people I see are struggling with a lot right now is, for example, is employment, and that obviously the cost for staff and for the benefits packages and everything else is one of the biggest line items in terms of cost and directly impacting profitability for many companies. I don't see too many individuals being willing to think outside of the box and how they pay the individuals that work for their companies. And because of that, a few different things happen. Number one, they might be overpaying for the work that individuals do when the right incentives aren't there between the activities that are being performed and how those individuals get paid. And because of that, there have been several individuals that came to us and said, "Hey, Eunicia, what do you see in this situation?" So one particular example, one of the lead crew engineers was being late to work on a very frequent basis, was taking time off very frequently, last minute, not even requests, but more of, "I'm just not going to be there today." And the business owner was in the situation where it's like, "I can't constantly be on the lookout because I'm the one that has to jump in every time it tickles his fancy to not be there." And I asked the question of how exactly is he incentivized? Well, he's salaried. Okay, so considering that so many people really strictly don't want to work because, well, they get benefits other ways nowadays, what are you doing to incentivize the right behavior? Why aren't you paying him based on the jobs that either he sells or he services, or give him bonuses in agreement in accordance to that, or maybe aligned to the management of the crews or profitability for the jobs or anything like that? He's like, I never really thought about that. So those are some of the things that when it comes to profitability, we really need to understand how we're spending the money and making sure that the right incentives are there. Because if the right incentives are there, then what ends up happening is not only does our profit go higher, but at the same time, we find more enjoyment in going to work and in having those individuals or perhaps incurring those expenses, because we know that they're optimized and we don't constantly question am I doing the right thing? The other thing is constantly being willing to make changes and make shifts in how we approach our costs and our profit lines, right? Sometimes we need to incur additional spend in order to make more money. Oftentimes, once again, people are scarce when it comes to wanting to spend on themselves because their idea is, well, I can do it myself. Well, you can, but if you could do it yourself and you put $1 in, $1 comes out, versus you pay somebody $2 and you get $5 or $6 back, they're not able to really take a step back to understand the direct dynamics between strategic spend and strategic investment in their business and overall profitability growth.
I love that. And I wanted to apologize for a couple of minutes ago. My big 100-pound bad German Shepherd's afraid of thunderstorms. So she lays at my feet during the day when that happens. And then the dog sitter went in and she was not happy the fact that somebody just walked in the front door. So she started barking. So I apologize for that. Kind of what happens sometimes when we're working from home office. But I also wanted to speak to that because when COVID hit, we got really worried like a lot of people do. And we really dove in for one of the first times to see what we could cut expense-wise. And it was staggering. By looking at staff that really wasn't performing up to par when they should have been, that we kind of carried along during good economic times, to software that we could have just paid one payment and got a massive discount versus paying monthly, to, I don't know, any number of different expenses. It was basically $1 million plus in savings. It was interesting. And we went from being like a lot of business owners where, we very low margins. We don't keep very much. We reinvest it all. That's the excuse for us business owners that don't do this the right way. And so we didn't have a lot of profit. But then when we changed it, we kept the profit margin and we live and die by that profit margin. And I got to tell you, it's nice. We put started stockpiling money in the bank. We get distributions as owners, all these things that we would love to have as entrepreneurs, but we don't, is just because of what you described. It's just because people neglect this. They're not looking at expenses. They're not looking at the bottom line. They're not owning a profit margin. And the night and day difference between owning a business when you do the things you're saying versus not is the difference between having the financial freedom you really want to have and just struggling to worry all the time about the financial health of the business. It's just what you said. It's just so important.
I completely agree. I love it. And I love when I see clients that are willing and open-minded to think about those things, because there's just so much in it for them at the end of the day.
As we wrap up, where can everybody go to get in touch? It sounds like you've got a phenomenal team. The people can talk to each other. There's all areas of leakage in a business that can account for, depending on the size, tens of thousands to millions of dollars that potentially are there to be found. If somebody's interested in figuring out what you can do to help them on the financial side to prevent a lot of this leakage, what step can they take? Where can they go to find you?
They can easily just go to our website or on social media. On social media, they can find us under Eunicia Peret or the Empowered Financial Planner, or they can just easily go to our website, www.empoweredfinancialplanner.com. Send us a quick message. We'd love to stay in touch and schedule a call and figure out if we can be of service, if perhaps we're the right fit, or if not, maybe there's somebody else that can potentially help them out. We're always willing and able to create introductions for folks so that they have a better chance at optimizing their overall financial standing.
Eunicia, thanks for coming on with us today.
It was my pleasure to be here. Thanks for having me.
So listen, if you're watching and listening to this, I can't, this is possibly one of the most important podcasts that I've ever done. And I legitimately mean that because I've been on both sides of this fence. As an entrepreneur, I've made the excuse that everything's just getting reinvested in the business and there's very little profit left over, right? I made that excuse for most of my professional career. I've worried about payroll. I've woke up in the middle of the night to see if there's enough money. I've had to borrow money last minute or put personal funds in. You can relate to this, I'm sure, to be able to meet payroll, to be able to meet your obligations. And then I've seen the other side. When you do what's being discussed, and it is a night and day difference. When you have a profit margin where every month you start building money in your savings accounts, where you're prepaying taxes in advance, where there's all these benefits and incentives that you're able to tap into that most of the world don't even know. It's been said that the IRS tax code was really created with all these significant benefits for entrepreneurs and business owners. But if you don't understand all these things beyond just the IRS and top line leakage and bottom line leakage and economic leakage and personal income leakage, if you don't get this, then what happens is you're just a worker. You're just working for whatever your salary is. It's not why we started businesses. The other side is that we get these big margins and then we start getting distributions, and the people that own the business get these really significant distributions, and we have more time off and we get to spend time with our families. And it literally is the difference between having the life that we want to have and just struggling in a job to keep the business afloat. It all comes down to this one thing, which is leakage. So if you want to be on the other side, get to the financial freedom side and have profits and get distributions and get pay increases and do profit bonuses to your team and all the things that come with that, then what you really need to do is go to empoweredfinancialplanner.com, empoweredfinancialplanner.com. And when you go to empoweredfinancialplanner.com, a lot of really good information, as well as being able to schedule consultation to be able to talk to Eunicia and her team about the kind of leakage you have and what they can do with their huge team to help you be able to stop that, put more money in your pocket, and have more money to grow your business. So thank you very much for tuning in. Make sure you visit empoweredfinancialplanner.com. Take care